Well, it's Friday again, which means it's time for The Trend, a new video series powered by Mortgage Champions, who is the official 2018 winner of the Community Impact Award by NAMBY, which is awesome.
Woo!
Super excited about that.
Yeah.
You can check out all the details at DaveRemillion.com. My name is Jake. I oversee our marketing and digital here. I'm here with Bo, who oversees our learning and development, and Mike, who oversees our operations. We're going to dive right in this week with our articles of the week. Bo, you got the first one for us.
Absolutely. So as we're going into 2019, there have been a ton of new headlines coming out, a ton of new articles, a ton of new studies. But I think the main topic of the week shouldn't surprise anybody: government shutdown. So we are now on day 27 of the longest standing government shutdown in U.S. history. Just kind of some big numbers. There are 800,000 federal workers who are currently working without pay. 420,000 of those are actually still working. They're just not being paid right now. So that's going to have a huge effect on the market, as we see a lot of people heading into possible foreclosure territory or late payments, things like that, not being able to pay off debts. So that alone is kind of an aside as a big story to keep an eye on, as well as what is going on in the mortgage industry. So the first thing is that USDA and FHA are both being impacted pretty drastically. USDA has stopped many of its functions, and because of that, a lot of USDA borrowers are in this state of limbo where they don't really know what to do going forward, because the USDA is not approving loans at this time. And so a lot of borrowers who are in the process, who were supposed to close weeks ago, are still waiting to get into their new homes. Same with FHA. The FHA has a huge backlog of mortgages that they are not guaranteeing right now. So we're seeing a lot of homeowners in between selling homes and buying new homes, but they can't get the funds to buy their new home yet. So that's something to keep an eye on, as well as the IRS, which was shut down partially. They're starting to get operations up and running, but tax returns are always something that need to be processed and need to go through underwriting in order to be approved. Well, a lot of borrowers weren't getting access to their tax returns, and so that created a massive backlog. Other things being affected: flood insurance has been impacted. There's also a big backlog on flood insurance policies. Overall, there are just a ton of consumers who are being negatively affected by this shutdown, and that's going to flood into other areas of the market that we're going to see. Now, fortunately, banks and credit unions have actually been making adjustments to their fees and to rates to help consumers out during this time. But as we know, any irregularities in those industries as well are going to have an impact eventually. There are experts who actually do think that if this shutdown lasts even just a little bit longer, the entire stock market could be drastically affected, and some are actually reporting that this could be a jumpstart to another recession. Now, if that's going to happen, we don't know, but we do know that this is a big deal. So the main question is, what do lenders and loan officers do with all of this information? As they're having their industry totally transformed before their eyes in a matter of a month. So
It's a big question.
Mm-hmm.
Interesting article. Next up, I've got a really interesting piece put out by the Mortgage Leader, another major topic sort of leading into 2019, the issue of affordability. They put out a great piece called Affordability, Keeping Non-Homeowners from Buying a Home. A lot of the article centered on a study, the home study in 2018 by the National Association of Realtors, the NAR, which stated that even though 75% of Americans still view homeownership as a significant milestone in having financial security and stepping up to that next social class, if you will, 43% of them think that they are not in a financial position to buy a home.
Wow.
And 33% think that there is some sort of life circumstance that is preventing them from becoming a homeowner. Which paired with what we saw in January, which was a huge increase in mortgage applications, right? I think we're at an 11th month high, is that correct?
Yes, yep.
It sets up the loan officer to be in this really weird position where they're having a lot more demand than they've seen in recent months. They're getting a lot of applications, but it's from borrowers who are arguably still facing an affordability issue and may not be aware of that, right? And who are likely motivated to be submitting an application now to try and lock in a lower rate, anticipating that rates will continue to rise, as we've talked about in 2019. So I think our takeaway a little bit is it could be very easy to be lazy, if you will, as a loan officer, and just take those calls and try to have that rate-centric conversation, because the borrower's going to be calling, right? Thinking, hey, I just want to lock in a rate, I want to get pre-approved, I want to get pre-qualified, you know what I mean? And not thinking through sort of their whole financial picture. Loan officers can actually be an incredible resource and an advocate for their borrowers, and kind of slow that conversation down, right? Meet them where they're at, but make them realize that there's a lot more to the composition of a loan than just rate, right? And while that's an important factor, there's a lot to consider in, you know, is this the right decision for you, and how can we make this the best decision for you, right? I'm not saying turn borrowers away and turn down applications, but have a comprehensive conversation with them and guide them through the process and educate them. Trust me, you will lose out to competitors by who can offer, you know, a 10th less % rate than you if you just let the borrower dictate, hey, I want to lock in a low rate right now, right? If you prove that there are other ways that you can add value to their experience and to their loan and to their home ownership, you're going to win the deal every single time. So I think that's kind of a key takeaway, and it's this weird confluence of affordability still being an issue, and yet at the same time people wanting to go ahead and lock in a lower rate and submit an application now. So
That's great.
We'll see where it goes.
That's awesome. Yeah, that actually, it goes right along with my article this week, looking through kind of the focus on millennials, looking at the Zillow group report on housing trends, as well as CNBC put out an article on student debt that was kind of also referencing the Fed Reserve study that came out just yesterday. But looking at this, we're seeing that millennials are having to spend, you know, so take the average millennial right now. They'd have to spend 11 years worth of savings just to get into like a medium price home, just from the down payment standpoint. And out of those medium price homes, there's only like 23% of the homes on the market qualify in that range. So we see, like you said, affordability is, you know, is a definite big challenge, a trend on everything that we're seeing. But, you know, as of like last June, like only 21% of those was, you know, one that the millennials could even go for. So we're seeing them turning to renting a lot. And obviously, there's a conversation that goes on a lot. The article showed that, you know, 24 to 36-year-olds, a lot of those are actually living with their parents, almost 30% of them. So one of the main culprits, though, that the article focused on is student debt. So, you know, we've been talking about this, you know, internally here, but we see that on average, student debt's around $30,000. One study showed also that the ages between 22 and 37 can range even up to $80,000 in student debt. So, like, that is a huge amount of debt going into trying to buy a home. So, but, you know, within all of that, there's still good news. You know, there is a silver lining. People do want to buy a home. Like, we see that in the studies that there's still desire for home ownership. So that's a good thing. But, and they're actually looking for alternatives for down payment. So in this article, we see that, you know, they're going to the bank of mom and dad and asking for help there. But even like new creative ways like crowdsourcing. So we're seeing that like as a way for getting that funding to get into that home. So interesting, you know, kind of cool. But from a lender perspective, like what we talk about here in the Mortgage Champions team a lot in our training is with that knowledge, what do we do with it? We have to be speaking to these borrowers in the millennial, you know, generation, knowing where they're coming from, thinking about this debt that they're dealing with, and, you know, being a millennial, myself, taking an approach of relationship building and education. Don't just throw out a bunch of stuff at them, but really walk through the process with them, because it's a challenging time. And through that, you can develop a lot of relationship, a lot of loyalty with those millennials, and open up opportunities, help them find ways like FHA programs and things like that. So those are just some things that came from that article I think are very pertinent and part of the trend, you know, this week.
Absolutely. And I think you made a good point that, you know, millennials, you know, all of us being millennials, we do need a little bit more hand-holding, because there is so much information out there nowadays, and it's very hard, even being in the industry for years now, having been a loan officer for a couple of years, even it's hard to find real good sources of, you know, this is what you do throughout the process, this is a smart way to buy a home. It's very difficult. So it's you need to have an expert who is in the industry, who is on top of things, who is an advocate for you to really guide you through the process, and help clear the way through this information overload that we experience.
Absolutely. That's a great point.
That's good. Well, those are our articles of the week. We'd love to know yours. Comment below, and you may just win a book bundle by Dale assembled on his favorite leadership books.
That's awesome.
So,
Awesome.
good
Cool.
stuff. Yeah. Let's go ahead and move on to our next segment, which is I'm very excited. This is a new one that we're gonna be doing, and so if I can get a drum roll, please. It is the tweet of the week. Bo, who's the winner?
The winner is the NBA.
Okay.
Not surprisingly. NBA is a fantastic source, and they came out with a tweet, and you actually hinted at it a little bit earlier, that U.S. mortgage applications climbed to an 11-month high. Now, going into a little bit more research on that, there's been a huge surge in refi applications coming out this week, and purchase applications have actually reached an 8-year high. So to your point, even though millennials are coming across a lot of challenges trying to get into the market, we know that the market is comprised of the majority of the homeowner market right now is millennials. And so we know that there is a ton of millennial activity. Obviously, baby boomers are still a huge factor in that as well. But like you said, rates. Right now, rates are driving that. Rates are down, and so people are trying to lock in low rates while they can. But just because rate is a motivation and rates are low, we want, as loan officers and as lenders and as mortgage professionals, we need to make sure that consumers are educated that just because rates are lower doesn't mean that all of the other factors are suddenly gone. If affordability was a factor before, a little bit lower rate isn't going to have that drastic of an impact. It's going to help, but it's not going to help you get into that same priced home that you've been eyeing and not being able to afford for the past couple of years. So how how do lenders, and I know you talked about it a little bit earlier, but how do lenders and loan officers approach lower rates, approach this surge in application activity, but do it from a standpoint of still being an advocate and still doing what's best for the borrower and not just going back to selling rate while you can to get in a quick buck?
Yeah, it's a great word, and it's a great tweet. We've retweeted it. You can check it out at MTG_champions on Twitter. You should retweet it as well. Awesome. Well, that's it for us this week. Thank you so much for watching, and thank you to Wes Pruitt, who was the first person to win our first competition in our inaugural episode last week. He commented below on the live stream, was the first one to do so. We sent him a copy of Dale's book, Navigating the Mortgage Maze. Like we mentioned earlier, if you'd like to win Dale's book bundle on personal leadership, it's going to be 3 books that he's picked out in the month of January. All you have to do is comment below, like we said, with your article of the week, and there's a possibility that it could also be featured either here or in another channel. For our social media.
Awesome.
So, as always, you can view the trend live here on Facebook every single Friday. Recaps are available on YouTube and LinkedIn. You can visit us on the web, as always, at dalevermillion.com, where there's always more great content, including Dale's 2019 Market Insights video. We just dropped that this week. It is some great content, some great stuff. Put in your email address, you can get access to the full video. It's like 16, 17 minutes long. I mean, it is a ton of content. And Bo structured it in an amazing way, put out some key questions, and then Dale just provided some deep, insightful answers to those questions. So it's really, really well done. Great job. That's awesome. So until next time, I think that's it for us. Thank you so much for watching from all of us here at Mortgage Champions. We'll see you next time.